Hey TSW FOREX, welcome to Chapter 8 of Phase 1. This is a TSW FOREX free course, and let's get straight into it. So in Chapter 8, we're going to discuss chart patterns, of course, and the types of chart patterns is what we're going to look at, and also the examples of chart patterns. So chart patterns introduction. One of the simplest thing and the fundamental basis of technical analysis are trend lines, right? And we already discussed what are trend lines in the previous chapter. These identify the resistance and support levels of price. When price move within these boundaries, they create what? Patterns. Chart patterns are a result of bulls and bears deciding what to do with price. Just as candlestick patterns are a representation of the psychology of human behavior, so are chart patterns. Okay, so the types of chart pattern, there are several types of chart patterns. There are mainly continuation and reversal patterns. These chart patterns are what indicates where price wants to be. They, which is the price, are in boundaries called trend lines, and these trend lines are what we use, are used to guide the trader when buying or selling, where to put stop loss and where to put take profit. So we're going to talk about the examples of continuation patterns that we may see in the chart. The main continuation patterns are, you have flags, you have the rectangles, the wedges, and the triangles. So those are the main continuation patterns. And in the flag, you will say, for example, you're in an uptrend. It can either be an uptrend or a downtrend. As we say, it's a continuation. So what you will see is, of course, every time we have a move up, so this is a flag. And remember, every time we have a flag, there will be a continuation pattern most of the times. And we're just going to discuss how it works. So when you say, for example, you're in an uptrend, and it can also work for a downtrend, but this time we're in an uptrend. If it's in an uptrend, it's called a bullish flag. If it's in a downtrend, we call it a bearish flag. And as you can see, we have price coming all the way up to the top. Then it meets resistance, hits support, and create this flag-like structure. So you'll see like this looks like a pole. So this will look like a pole, and this will look like a flag flowing in the wind. So this is why we call it the flag pattern. It's always at an angle, because every time you have a move up, we have a correction down, and this is how we discuss or identify, I should say, the flag patterns. So after coming on the support level, we can see a continuation in the direction of the trend. Rectangle. Usually these ones are in parallel lines that are flat. So you'll see that the angle, normally that we say they have a correction coming down after the impulse. So we have a impulse move and a correction. When it's correcting, we normally have a structure set in a way that it comes at an angle. But in the rectangle pattern, it ranges. Remember, we say that the market moves in three ways. It moves in an uptrend, it moves downward, or it moves sideways. In a rectangle pattern, it normally moves in a sideways structure, or between boundaries, or between the support here and the resistance here. So and then after hitting the support at 3 or 4 times, it usually continues in the direction of the trend. Wedges, similar to the flag, but this time it's not parallel, it's at an angle. So you can see it's wide at the beginning and small near to forming an apex. So that is the wedge pattern. Triangle, similar. We have a wide, when it begins, a wide angle, and as it squeezes, it's like price squeeze, it's squeezing between these boundaries, squeezing till it has no more room to move. And guess what? It continues in the direction of the trend. All right, so reversal patterns. Of course, reversal patterns are patterns that reverse the trend, whatever trend you were in, whether it be uptrend or downtrend. When you see a reversal pattern, it will move in the opposite direction. So we're going to look at some examples: head and shoulder, the inverse head and shoulder. So we have the head and shoulders, which is bearish, inverse head and shoulder, bullish. Double top, bearish. Double bottom, bullish. Rising wedge, bearish. Falling wedge, bullish. So we're going to look at the counterpart for each. The head and shoulder and its counterpart. The double top and its counterpart. And the rising wedge and its counterpart. So the head and shoulder. We're in an uptrend, right? Price comes up, finds resistance, hits support. Finds, breaks the previous resistance level. As we can see, comes to a new resistance level. The support, of course, when we say when resistance is broken, it becomes support. It does not respect that one. It comes back all the way down to the previous support. We call that a neckline. So this is called the neckline. Remember, head and shoulders we're discussing. So we have the neckline, and this is what the left shoulder. This is called the head, and this is what we call the right shoulder. But how the right shoulder works, sometimes it's equal to that of the left shoulder, or a fib level, which would be 50% of this move, or 61.8% of the move from the head to the shoulder, to the neckline here. So we'll discuss that on the charts when we go on the charts. This is just a theoretical explanation. All of this will be explained on the charts when we do our on-chart video. This is just the theoretical section. Inverse head and shoulder, just the same. We're in a downtrend. So we're in a downtrend. Does the same thing. Price finds support, comes the resistance. Breaks the previous support, find a new support. Here we call that the head. After the head, we hit the resistance level of this left shoulder here. Comes back to the neckline. Comes back, and of course it's not always equal. It's either the 50% or the 61.8. It's some fib level. We'll discuss that further in a different when the course is finished. When we're on the charts, and then it breaks and continue. Double top, just the same. This is a bearish reversal pattern. We're in an uptrend. Hits, finds supports. Resistance level here, finds a support. And guess what? What's the psychology of the market? You try once and fail, you try again. So this is how it happens. It tries one more time, and normally we have like a wick. When the second time we'll have a wick, so we'll have a candlestick like this, right? And a wick right here. So sometimes the price of the wick will go extend from the previous high, or sometimes it may even be lower than the previous high we may have. So you will find that price even go higher, or price comes up, and when it retests, it don't even reach the level and goes a little bit short. So sometimes you will see that, but there's a variation. But this is a general setup for a double top. Double bottom, likewise, self-explanatory. And of course, remember to draw these. You need your pencil and your rulers to draw these. These are what we're going to discuss after the course is finished. Rising wedge, just the same. We have a rising wedge, rising structure. Price is in an uptrend. It hits support, resistance, finds support. Hit resistance, finds support, and it does until it's a wedge-like formation. And then what? Normally on the third or fourth. So we may have like a third or a fourth. So we have a third or fourth touch on the resistance level. We have a breakdown in the opposite direction. Likewise for the falling wedge, we have a downtrend, and we have touch and support, touch and resistance, touch and support, touch, and you see that price is squeezing. So after the third or the fourth touch on that support level, right, on the third or the fourth, excuse my writing, I'm not using a mouse. So the third or fourth level, we have a movement in the opposite direction. These must be drawn. All of these, pause the video if you should. They must be drawn because we're going to discuss them. We're going to use them. These are your bread and butter that we're going to use in all the videos that we're going to do on TSW Forex. So all of the analysis that you see on this channel, a lot of these structure will be seen. So this is the end of chapter 8, and we're looking forward to see you in the final chapter where we discuss the types of traders. After this course is finished, we're going head on into more advanced stuff. We're going to talk about brokers some more, chart patterns some more, spending more times on a chart. Of course, it's a practical field as we said before, and we're just looking forward to giving free education to everyone out there who needs it. Thank you for your love and support, and this is the end of chapter 8. Looking forward to seeing you in the next episode.